Last week, mortgage rates spiked up again and are back near the highest they've been all year long. Inflation went up for the first time in 13 months, but only by 0.2%, so we'll talk about what that means for mortgage rates. There are still less homes on the market today than there were a year ago, even with mortgage rates being up or above 7% for nearly 14 weeks now. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I do a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be a seller looking for top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We'll also be tracking mortgage rates as well as mortgage purchase applications, which are the best leading indicator to what demand is going to look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, I do a top 10 ranked list of the hottest and coolest cities and zip codes in both Dallas and Collin counties. That's actually my favorite part of the video, so you don't want to miss it. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Okay, today is August 14th. Let's see what the data is telling us. And if this is an old video, you can click on the playlist here to get to the latest market update. First up is market news. New inflation numbers are out. Inflation is up 3.2% year over year, which of course is up 0.2% from last month's reading of 3%. And remember, the Fed has said they're going to keep breaking things until inflation gets down below 2%. But I wanted to show you something pretty incredible. 90% of this inflation is all coming from housing. And the shelter component of inflation is by far the least accurate of anything you can measure. It only measures rents that are currently in place, not market asking rents. So most renters will only see this number change once a year. And if they signed a longer lease of 2 or more years, this number may not change for them for years. So this indicator can literally lag for years. So the numbers the Fed is looking at to account for today's inflation may be leases that were signed back in 2021. So hardly relevant to today. According to data from Apartment List, monthly rent growth has already peaked this year, and average rents in August fell from where they were a year ago, which is the first year-over-year decline in rents since the beginning of the pandemic. Vacancy rates are also returning to more typical levels, although it's likely none of this has to do with the Fed's actions and everything to do with a ton of multifamily and apartment complexes being completed. So just a lot of new supply coming onto the market, as things should be. The one piece of good news here is that home prices, which are still rising in many markets, actually have nothing to do with housing inflation. They're only looking at rents. But I want you to look at this chart. This is actually inflation minus the shelter component in the US. So as you can see, the Fed wants us to be below 2%. This line up here is 2.5%. And if you remove all of the housing inflation, which again is 90% of the inflation is all from rents being too high, then inflation is basically gone. So this is good news because it means once the shelter component finally catches up, we're for sure going to be below that 2%, then we can look for rate cuts. So it's just a matter of how long until these rent inflation numbers catch up. But how crazy is that? Outside of the shelter component, inflation is basically gone. Okay, that's enough of that. Moving on to interest rates. So as you can see, rates started out at 7.03. It looked like things were getting better. Then we had a bad bond auction, which we're about to talk about, and they ended the week at 7.19, which is nearly the highest they've been this year. I think 7.22 is the highest, so very close. Okay, so what caused this? Yes, inflation did go up a little, but the bigger news is it looks like we had a bad bond auction, which means too much debt came on and there were just too few buyers. And this is a component that we haven't really talked about yet, but it directly impacts mortgage rates. You may know that mortgage rates closely follow the 10-year treasury rate, but you may not know what causes the 10-year to go up and down. It's the same as anything, supply and demand. When demand is high, people are willing to pay higher prices and accept a lower yield. When demand is low, people will only buy them at a lower price to get a higher yield. That's what we saw this week, too much debt or supply being auctioned and too few buyers or too low of demand. So 10-year yields went up, and mortgage rates, of course, followed up. That's the best I can summarize it. It's a complicated topic. So we've had 14 consecutive weeks around or above 7%. And regarding mortgage purchase applications, we saw another 3% decline this week. We would say that's a 3% decline in demand. And I believe this is the third week in a row that we've seen a 3% week over week decline. This makes a total of 14 positive and 16 negative mortgage rate prints this year. Yet there are still too many buyers for too little supply. Moving on to a few more graphics about inventory. As you can see, this dot is this year. This dot is 1 year ago. We have less inventory today than we did a year ago, and this is on a national level. And inventory is still rising, but it's rising this slowly, and we needed it to be doing this, which is what it did last year. You can see it also here. The black line is this year, the green line is last year. Less inventory on the market than there was a year ago. It's also climbing slower, but I want you to see in 2021, the peak was around here, somewhere in September. But last year, when rates continued to climb up near 7% for the very first time, we had another push of inventory upwards. I don't know that that's going to happen this year. here. So it may be that we only have a few more weeks before inventory starts to decline. So all this data is telling you is there's no evidence yet that it's going to get any easier or cheaper to buy a home. I say this every week. If you can buy a home, then you buy a home. Don't try to time the market. It's a losing game. And if you're still on the fence about whether or not it's a good time to buy, please watch this video. Very quickly, we'll cover the MLS data. In Dallas County last week, we saw 292 closed sales. That's 54 less than last week. 435 new listings. That's 3 less than last week. And 84 of the homes that closed were immediate sales, meaning they sold within the first week. And that number is down 29 from the previous week. So clearly a slower week than the previous week. Looking at Collin County, 207 closed sales. That's 28 less than last week. 338 new listings. That's exactly the same as last week. And 74 of the sales closed were immediate sales, and that's down 6 from last week. Okay, let's move on to the housing data, looking at Dallas County first. Okay, not going to spend a ton of time here, but if you watch my videos, you know I use the Market Action Index, which is just, it takes all of this info, puts it to one easy to read graphic. We're obviously still in a strong seller's market. The way to read this is a 30 and below is a buyer's market. Anything above that, we're just seeing how much of a seller's market are we in, and we're still at a 50 here in Dallas, which is a strong seller's market. As you can see, it's been declining since rates started going up. We've gone from 56 down to a 50.48. But median list price is still holding pretty strong. Median days on market, same at 35. Price decreases 42. We talked about this a little last week. You can expect price decreases to go up as inventory starts to stack up, but most of it is the inventory that nobody wants. So they're just going to keep dropping prices. So expect this number to start going up every week, but also expect that the very desirable homes are still going to be selling right away. So it depends what kind of home you're looking for. If you're looking for a fixer-up or something like that, then this will benefit you. But if you're just looking for a nice house to live in, probably not. Inventory, no real climb. It's been pretty steady, 2,600 to 2,700. That's from July 7th to August 11th. We definitely need that number to go up faster. So that's it. Rates are high. Things are moving slow. Things are cooling off a little bit, but 50 is still firmly a seller's market. So we have a long way before things get exciting for you as a buyer. And the other side to that is if this number does drop, it means rates have gone even higher, which means houses have gotten way less affordable. So if you're waiting to buy, don't think that if this number goes lower, it's going to be easier for you, because that means houses, your monthly payment is going to be way more expensive. And if you want to be set up on a search like this for your specific zip code or city, you can look at all of this in detail. You can break it down into market segments. Just text me, tell me your name, your email address, and which city or zip code that you want to be put on. All right, moving on to Collin County, pretty much the same. We've been seeing a decline. It looks like a bigger decline. We're up to 53, down to 48, but still a very strong seller's market. Nothing new here. We do see prices have stabilized. They found a bottom back here on July 21st, and they've climbed a little bit since, so everything is just holding flat at this point. Their median days on market is up to the same number as Dallas. Their price decreases are about the same, but it's those same type of houses that are just sitting that nobody's wanting, and their inventory has been very flat. It almost actually looks like it curved down a little bit. Yeah, from 2021 down to 2006 this week. So not what we want to see in inventory. Okay, now moving on to our top 10 ranked charts. These are the hottest and coolest cities and zip codes in Dallas and Collin counties. These are ranking out of all 84 zip codes in Dallas County and all 26 zip codes in Collin County. So starting with the top 10 cities list, the absolute hottest city in all of Dallas and Collin counties is Carrollton, Texas, which heated up 2 spots this week. Grapevine remains at number 2. Balch Springs, which had a very short-lived run at number 1 last week, falls all the way to number 3. Sachse, Louisville, Richardson, Coppell, and Irving all remain in their same spots. Plano heats up 1 and Garland moves down 1. So not a lot of movement this week other than in the top 3 and in the bottom 2. So that's unusual. Then we want to zoom in on the specific zip codes. The absolute hottest zip code is Carrollton, Texas 75007, followed by Plano 75023, Richardson 75081, Richardson 75082, Grapevine 76051, Balch Springs 75180, Carrollton 75006, Grand Prairie 75050, Garland 75044, and Grand Prairie 75052. Now moving on, same thing, coolest cities and zip codes. Leonard, Texas remains the absolute coolest city. Last week it hit for the first time under a 30, which makes it officially a buyer's market. Today it continues its descent into oblivion. Whitewright remains number 2. It looks like it held fine this week. It's on the verge of a buyer's market, but did not move down this week. Then Blue Ridge, Ferris, and Sunnyvale all held their spots. Rockwall cooled off 2. Prosper heats up 1. Salina cools off 2. Royce City heats up 2. And Red Oak heats up 1. So nothing really to get excited about here unless you happen to be looking in Leonard, Texas, which I don't know anyone who is, which is probably why it's a buyer's market. So that's it for today's video. I'd love to hear any feedback from you in the comments. As always, if you're looking to buy or sell in the Dallas market, just call, text, or shoot me an email. I'd love to connect. Thanks for watching. I'll see you in the next video.